Welcome to my YouTube channel. In today's video, I'm going to be showing you one of the top profitable indicators that traders use as a source of signal in placing their trade. This indicator has 90% accuracy if only you can follow a simple rule, and also work best for scalping and day trading. So without further ado, let's proceed. The indicator I'm talking about is the Hiking Ashi RSI. So we are going to apply this indicator and make some little changes in it. To apply this indicator, you hit on this plus button here. You go to FS indicators, then you search for Hiking Ashi RSI. Okay, this is it. This is the one at the top by J Rogers. Click on it once, then we go back. Okay, this is the indicator I'm talking about. You can see it, but right now the chart is not that clear, so we are going to make some little adjustments to it. Click on settings, then click on the indicator rather, then you go to the setting. So just little adjustment. We uncheck this RSI histogram so that we have a better view. Also uncheck this one and uncheck this RSI overlay. Then go to inputs. On input, we change this one here to 7. Just a simple edit, then hit on OK. Now you can see there's a big change here. If you notice, this wasn't the way it was, this wasn't how it was before. So we add one extra indicator. That is the EMA means exponential moving average. So let's add that one also. We'll click on EMA. So this is it, moving average exponential. Click on it once. So it has been added. Go back. Why is not showing? Okay, it's showing. So but it's too tiny. You can see there's a blue line. Let me increase it. You can see there's a blue thin line in between, this blue thin line. So but let's make it clearer so I can easily see it. So let's do some little settings. Click the indicator up here, so we go to settings, the settings up here, then change the length to 200. Let's make it 200 exponential moving average. Then let's go to style, leave the color at blue. Let's increase the thickness of the line so that to be obvious. Then go back. Now you can see the line is very obvious. So now the meaning of this, how we are going to be using this indicator, is that both of them will be working simultaneously. Looking at this Hiking Ashi RSI here, you notice there's a little thin line in between. It's that line, the figure of that line is 0.00. Then up here there's another line before the red sign up. That line, that's the figure for that line is 20, and the last figure is minus 20. So positive 20 minus 20, then in between is 0.00. Then at the top we have red line. At it beneath it we have green line, then in between we have the blue line. Now I will explain everything. This, when this chart touches this green line, it's simply telling you that the market is oversold. So definitely sellers, buyers want to enter the market with strong momentum and push the market upward. And when the prices touches this red section here, it's trying to tell you that the buyers are in control and the buyers have pushed the price upward and it's now oversold. When it touches the red section, the market is oversold. Then the market is overbought rather. When it touches the red section, the market is over but then sellers will enter the market and start with strong momentum and start pushing it downward. Then when it touches the green line, it's a signal that the market is oversold, so vice versa. Then this green blue line here is the 200 exponential moving average. How this work is that once the price or the chart rather is above the 200 exponential moving average, where it's a sign, it's a signal that the market is on upward trend, and when it's beneath the or below the blue line, is we are on the downtrend. So that's just it. And also here, once you notice that the market is moving above the is moving in between the 20 the 0.00 up to the 20 positive 20, the market is telling us that the we are on the upward trend. And when the price is below this is in between 0.00 to negative 20, we are on the downward trend. And if it's just touching this line and just moving in between this line, the market is just consolidating. That means the market is just going sideways. So with that being said, let's proceed, and I'll be using a perfect chart for to explain this better for you, so stay tuned. In our first example, we'll be using the liner versus United States Tether Perpetual. So from the chart here, like I said before now, if the price move from above the exponential moving and 200 exponential moving average downward, that means we are on a downtrend. But if the price is above the 200 exponential moving average, we are on the upward trend. Same thing applicable to the Heiken Ashi RSI. If the price is above the 0.00, this middle line here, so that means we are on the upward trend. If the price is below the 0.00 middle line, we are on the downtrend. And when the price touches this green section, that means the asset is oversold, so we need to buy. It's a signal to buy. And when the price touches this red section here, that means the asset is overbought, so we need to sell or go short. Now from this chart here, we can see a signal that is dropping, and the right place to enter this market is not really here, because I said something. I said I prefer trading the upward trend or the downward trend. It's either you go long or you go short. So once the chart pattern is not clear, it's better for you not to enter the trade. So when the price touches this green section, fine, you can buy. But me, I will need a better signal, a better confirmation. So I will wait for the price to move up so that I can see that it's on the 0.00 line here, this middle line. So once it move up, I will try to confirm with the exponential 200 exponential moving average for me to know if we are on the uptrend or downtrend. So from here, you can see that the chart went upward. When it get to this spot here, I will want to buy. You can see get to this spot and there's a little bit spike, a little bit downward spike here. So the price touches this middle line here, so I will buy. If you fail to buy here, then the second place to buy is at this particular point. When the price move downward a little bit, you can see from here it crosses down below the 0.00 line, that is the middle line, but it hasn't touches the green section yet, so we are still on the upward trend. And even the 200 exponential moving average is giving us a signal that we are still on the upward trend. Therefore the price has not crossed it. So let's continue to see where it's going. You can see that the upward trend continues, right? The upward trend continue. And to confirm it here, you can see that when the chart move upward, it keep maintaining this upward section. You can only have a little spike downward, it will still bounce back to the upward section. It will not touch this green section here. That is to show that we are still on the upward trend. And even with the 200 exponential moving average, you can see that the price is still on the upward trend. So this is the best time to enter a trade. You go long. Let's just try to see the percentage that this trade would have given off. As if we catch it earlier, let's say earlier from here. Let's not even go down here. Let's use here for example. Let me adjust the charts. So let's see how many percentage. So we are going long now from here. So you can see this is even more than, let's say 50%, 50.49% for just scalping or day trading. You can see this is a very, very good percentage. So let's proceed and see if our pattern is right. So you can see it keep going, the price keep moving upward, and from the hiking RSI here, the price have not touched this green section, which means we are on a strong upward trend. So the price keep moving in between the 0.00 middle line and this upward section here. It may just spike down a little bit and bounce back, and the confirmation is also here because the price has not crossed the 200 exponential moving average. So we continue. Okay, look at what happened here. The price crossed down this exponential moving and 200 exponential moving average. So this signal is telling you that you need to do what? You need to close your trade. You need to close your trade and take your profit. So this is the right place to take your profit. Probably you've made a lot of profit, because 50% is not just a small profit for a day. So from here again, there's a big confirmation that the trend has changed. Look at it here. The price has touches the green section here. So this is a big confirmation that the trend has changed. Now let's continue to see if the trend has really changed. Okay, you can see it keep going downward. There's a kind of reversal here, but still yet the buyers don't have enough of momentum to keep it upward. The price see fall down and keep continuing to go downward trend. So it still crossed the 200 exponential moving average. So the downward trend continue. You can see when price crosses this line again, the downward trend continue. So look at what we have here. The price touches the green section here, which means it's oversold, and the buyer said trying to push it up, but you can see that the price refused to, from here you can see the price refused to touch this red section here, which means we are on a downward trend. So once the price touches here, you allow it to move up a little bit, you re-enter the trade up here or up here, then you continue with the down trade. Now you can see that the price is moving towards the down trade. Okay, this is the second example. In this example, we are going to be using the ENX versus the United States Tether perpetual. Like I told you, this method works best for day traders and scalpers. So looking at the charts here, we notice that it was actually uptrend, but it crosses the 200 exponential moving average, and I told you that you don't just enter the trade because it has crosses the 200 exponential moving average. Wait for confirmation. So it looks as if the downtrend is about to start, but unfortunately the trade went upward again. So now you won't just enter the trade from here, still wait for confirmation to know if actually we are on the upward trend. Then it's already on the 200 exponential moving average, and it's at the top of this section here. That is from the 0.00 middle line as said above, So we can tell that probably the upward trend is about to start again. That means the buyers have gained more momentum. So we wait for confirmation. When you get to this place, we know that probably the upward trend is going to be strong, so you don't enter from here. Then you wait for the trade to come down a little bit, since you are going long. So when it touches this middle line here, that's the right time to buy. You can see it touches the 200 exponential moving average as well, so you can enter a long position from here and hold on to it. You can see that the trend keep moving up. It come, and one thing you should know, that a chart cannot just be going up straightly like that. It can't be going up smoothly. There must be ups and down. That is, there must be ups and downs. So you can see that it keep going up. Let's draw and see. Okay, so you can see that it went straight up and started coming down again. The buyers started losing momentum and the sellers took over from the buyers. You can see that the price is moving downward. So just assume that you bought from here. We'll go long from here. So like I told you, this is a scalping method. This is not a if you are a scalper, this is very it's very profitable for you. You can see this 10.37%. It's a good percentage for a day trader or a scalper within just this is a 5-minute chart. It's a 5-minute chart I'm using. So you can see how the trend went up and started coming down again. So once it crosses this line here, that means this is a signal for you to start taking your profit, telling you that you should take your profits. Anything can happen from here. And if you move, you'll see that the price went down and touches this green section here. That means the trade is about to change direction. From here, it has been going upward. There will be a little spike. It will still maintain the upward section. The price has not touched the green section, so you are still good to go, and it has not crossed the 200 exponential moving average, so we are still good to go. So let's see what happens next. You can see to tell you that this is a strong upward trend. So the buyers started taking control again. When the price touches here, you can see it's moved upward. But this is not telling you that you should enter the trade, because you've not confirmed it from here yet. It's still showing that we are on the downward trade. Wait for a confirmation using the 200 exponential moving average. You can see it revised back again and still touches the green section here. So the buyers still push the price upward. Then from here now, you can confirm the trade that okay, probably this is a good place to enter. It's showing that we are on the upward trend here, and also here is showing that we are on the upward trend. So you wait to see a red candle. The red candle came down, went up again. So another red candle started coming down. You can see from here it touches this blue line. So once it touches this line here, it's a right section for you to enter the trade again. So you go long again. So imagine that you enter this trade twice a day. Let's check what the percentage is here. From here, let me adjust the chart. So let's see. You see the chart even keep going upward. So let's just assume, let's take it like this. So see, we would have made, and this is 31.08% just for a day trade. Imagine. So imagine how much percentage you would have made plus the first one. Anyway, let's proceed. So you can see it keep moving up. You see it maintain that direction. So you wait for it to cross again. Once it cross, then you take your profit. That's just how to do it. So I should believe you enjoyed this video, and if you did, please try and subscribe and also turn on the notification button, so that whenever I drop any content, you'll be among the first person to get notified. Thank you very much, and do have a wonderful day.